Yeah, so I'll be just sharing a couple of reports with you. ठीक है, तो आज के सेशन में भी we'll be trying to analyze the global markets, right? And I'll be just further sharing a couple of reports with you. And once we go ahead, we can just try to understand that what has happened in the market over the previous year or months. And again, that report has been shared with you already by the multiple groups and channels of which you are a part of. Just give me a second, and we shall be having a brief discussion upon that reports today, since we have entered the third quarter now, right? We have entered the Q2 FY26. July, August, September quarter is over, and it's a summary of what all has happened in terms of market returns globally, as well as about the market valuations from a total market perspective, from a broader market perspective, as well as from a sectoral perspective. So I'll just start sharing my screen and just let me know if my screen is visible as well. So before I go to the global market snapshot, I'll just stop sharing and just share the valuations PDF with you. Just a second. तो जैसे कि we can see this one. I hope the PDF is visible with everybody. So this one is the market PDF, which was published as of 30th of September 2025. And it talks about what all has happened in the market based upon the previous 3 months or 1 year basis in terms of valuations, as well as in terms of the returns of the different sectoral indices, and also on a market cap basis, be it for Nifty 50 or a Nifty small cap or a Nifty mid cap index, right? So if we see the current scenario, right? So as of today, if we see the current scenario, we see that about 50% of the companies in the Nifty 50, right? And the same thing has been mentioned in clearly here as well, that about the 50% of the Nifty constituents trade at a premium to their historical averages. Now, if we talk about the Nifty constituents, it talks about all the listed companies. So around 4,500 companies are listed on the stock exchanges. Right. So out of the 4,500 companies, more than 50% of the companies are trading at a valuation which is premium to their historical averages. Right. वो companies market में महंगी बिक रही हैं. Now the question that comes into place is, are the earnings supporting those valuations? Right. Because the Indian market seem to be at a very high valuation juncture as of this particular point of time, though better than September 2024. But the only problem that the Indian market is facing as of now is the earnings. The earnings have been timid, the earnings have been weak. And as a result, the valuations are being questioned globally. That should people really invest into India because valuations are high, not sheerly high. We aren't into a bubble territory. We are not into a bubble territory. We are not into a stage of irrational exuberance where everything is rising in the market and people are just chasing money for good stocks or bad stocks per se. हम ऐसी सिचुएशन में करेंटली मार्केट में नहीं है. But the problem is the earnings are very low. For a few of the companies, for a few of the themes, for a few of the sectors, the earnings are fairly stable and strong as well. So as of this particular point of time, we as a student of finance or as someone who is investing into Indian markets needs to analyze at which themes or which sectoral picks are giving you those positive earnings or giving you the earning growth coefficient, right? So the company should be driven by high earning growth coefficient. And even if the valuations are high, those need to be supported by the earning growth, right? But at this particular point of time, if out of the 4,500 companies, right, more than 50% of the companies are trading at a valuation which is above their prehistorical averages, maybe more than past 10 year or a past 5 year average, we need to find out that which companies out of those companies are still really good, that despite being having higher valuations, the earnings are very supportive, right? So that's a part of an equity research analyst or an investment specialist who tries to perform research upon the companies and tries to ascertain कि हमें किस sector में जाना है. Now this report is being published by Motilal Oswal Financial Services. And they tend to publish this report on a quarterly basis, which tends to tell you about the different valuations of different sectors and also give you a perspective upon the return and the growth trajectory of the different themes or sectors or stocks. Though there is no stock recommendation, the report is available with you already, but it will help you out in your interviews. Whenever you go out for a corporate interview, or be it in your current profile for equity research, investment specialist profiles, portfolio management profiles, or simply kind of a sales profile into financial sales, right? So these are the basic things which people in the interview can ask you for, because you need to talk with people based upon different profiles upon the market valuations, and you need to be well versed with numbers and what's happening as a generic view in different sectors. What's your view upon the different sectors? So this report will really help you to build up a view upon the different sectors of the Indian markets, and also help you understand the valuations of those particular sectors and what is the future growth trajectory in terms of outlook and earnings for these particular sectors, combined with valuations, of course, right? So this report is of a 52-page report. You guys have time, you can go through that. But I'll be just trying to touch base upon few of the major points of these reports that one needs to understand. कि what majorly most important ingredients of these report क्या हैं? इसको भी इग्नोर करते हैं. The few of the charts are very important, and these charts really help you to define a pitch. If you want to pitch somebody about the Indian markets, if you want to talk upon different platforms about the Indian market, because many of the people you see on a CNBC TV 18 or a Z Business or a Bloomberg TV or someone who has been invited as a guest on a podcast, they're well versed with such numbers that we do not know. So this report gives you a clear-cut perspective about all these numbers as well, and makes you much more knowledgeable and intelligent to have great talks about markets. So as of now, if we see, as of September 25 ended, the Indian market is contributing 3.5% to the global market cap. Out of the global market cap, globally companies, all the companies and countries are being involved, both your emerging companies and developed companies, countries per se. India as a country is contributing 3.5% to the global market cap. And it is not just the data for Nifty 50 or Nifty 500. I'm talking about all the listed companies. 4.5K, 5K companies are listed on the stock exchanges, combining all the large cap companies, or mid cap companies, small cap companies, and micro cap companies. 3.5% is our current global weightage in market cap globally. In September 2024, when the market reached all-time highs, right? And every sector, every stock was being talked about was being talked about or discussed from an overly bubbly territory, right? And many of the people commented upon the excessive valuations upon the Indian markets. And the major correction that we witnessed was from September 24 highs itself, right? So the market was in the all-time high. The valuations were in a superly bubbly territory. At that point of time, if you see this chart around September 2024, our contribution towards the global market cap was 4.6%. It came down to 3.6. The current stands at 3.5%. The Indian markets on an average have stayed 2.8%, 3% as a percentage of the global market cap. But as of now, a percentage stands at 3.5%. Now, obviously, we want a higher contribution towards the global market cap. But the higher contribution in the global market cap should come on account of earning growth and not multiple expansion, right? Majorly, companies, the Indian sector or the Indian markets have witnessed the increase in contribution in the global market cap on account of PE expansion. All the price return that we have seen, all the stock prices that we have seen over the past decade, past 15 years, 20 years data, if you see, I even posted something about the same on LinkedIn. I compared the US earnings and PE expansion with the India's earnings and PE expansion. And the data told us, or the data reflected was that the price return in the US stocks has been majorly attributed towards more of earning growth and less of multiple expansion. And here in multiple, I'm talking about the price to earning multiple. But if I talk about the Indian markets, the Indian context, majorly all the price return has come up on account of the multiple expansion and not because of the earning growth. So we want our weightage to increase in the global market capitalization, but the weightage should increase not because of P expansion, should increase because of P expansion also, but majorly the increase should be attributed towards earning growth, right? In my previous session, I've tried to break down the price return into earning growth and P expansion, राइट? तो एक बार उसको रेफर भी करना, बिकॉज जब भी किसी भी स्टॉक का प्राइस बढ़ता है वो सिर्फ अर्निंग ग्रोथ की वजह से नहीं बढ़ता, टू बी ऑनेस्ट, राइट? वो मल्टीपल एक्सपेंशन की वजह से भी बढ़ता है, एंड दैट इज समथिंग वी नीड टू अंडरस्टैंड. बट एज ऑफ नाउ हम 3.5% पे बैठे हैं. We all know about the currency movement. Our currency has been the worst performing currency over the past 1 year. It is down 3.5%, 3.6% odd, at par with a country like Indonesia. So Indonesia and India are the only countries where there has been maximum devaluation of the currency or depreciation of the currency per se vis-a-vis the USD. Correct. Now, if I go down, जस्ट अ सेकेंड, होपफुली आई एम नॉट मिसिंग एनीथिंग। तो अगर मैं नीचे जाऊँ, देखो यहाँ पे, इफ यू सी, इफ समवन आस्क्स यू अबाउट अ 5 year CAGR of Nifty 50 as of September 2025, because the CAGR will keep on changing as months pass. Right? 6 months back, the CAGR of Nifty 50 was 20%. 6 months back, the CAGR of the Nifty mid cap was 35-40%. And same for small caps. But as we have seen all the correction from September 2024 highs that 6 to 8 month correction, and now the market is morely into a consolidation period. The Nifty 5 year CAGR is 17%. For mid cap, it has been 27.2%, and small cap, it has been 24.7%. So clearly, we can see that the mid cap is something which has outperformed the large cap and the small cap over a 5 year period, right? So usually what used to happen, the small caps used to outperform the mid cap and large cap. But now the trajectory has completely changed. The mid cap is outperforming both the small caps and large caps. Why? The one reason is earning growth. I also talked about the mid cap space in one of my live sessions, and also posted one post on LinkedIn that where the mid cap is doing really well. The mid cap seems much more appealing. One reason is the earning growth. The earning growth has been very solid. Even if you see the Q1 FY26 key earning growth year on year, the Q1 FY26, right, year on year earning growth for the Nifty 150 mid cap index, it has been 21%. Very strong number, 21%. For Nifty 250 small cap, it has been just 4%. For Nifty 50 index, it has been just 10%, and Nifty 500 as a broader index landscape, it has been between 7 to 8%. So Nifty mid cap is really giving you better returns in terms of earnings as well, which is getting translated towards the price momentum as well. And यहाँ पे if you see, it clearly states that during the last 12 months, small caps have declined by 8%, but mid caps and large caps have just declined by 5 to 6%. But over the last 5 years, now this number is the simple return period, right? It's a point to point return. It's not a CAGR. CAGR का number you have here. But if we talk about just in case of simple return or a time weighted kind of return kind of stuff, it says that over the last 5 years, mid caps have significantly outperformed large caps by 114%. So mid caps have beaten the large caps by 114% on an absolute basis, and small caps have beaten large caps by 83%. So it clearly shows mid cap space seems to be the most appealing space as of now in terms of earnings, not in terms of valuation, but earnings are supporting the valuation. Nifty 150 mid cap trades around 33x price to earning multiple as of now. It trades at a 1 year forward multiple of 28x, because again the earnings are bound to rise for mid cap and the multiple will come down. करेक्ट, आपका बेस बढ़ जाएगा ना, बिकॉज आपका प्राइस टू अर्निंग मल्टीपल क्या होता है, यू हैव प्राइस इन द न्यूमरेटर एंड यू हैव ईपीएस इन डिनोमिनेटर। तो अगर ईपीएस बढ़ेगा तो आपका मल्टीपल भी घटेगा, आपके मल्टीपल की वैल्यू भी कम हो जाएगी। करेक्ट। तो अगर निफ्टी 150 मिड कैप इंडेक्स 33x पे ट्रेड कर रहा है, अर्निंग 21x है, या 21% है, आगे जाके वो बढ़ेंगे तो मल्टीपल भी तो कम होगा। Correct? So Nifty 150 mid cap is trading at a good valuation. 1 year forward price to earning multiple of 27x, 28x approximately. Correct? तो ये चीज हमें जानना बहुत इंपॉर्टेंट है कि एज ऑफ नाउ मिड कैप इज डूइंग रियली वेल, एंड मिड कैप इज बीटिंग अप और आउट परफॉर्मिंग बोथ द स्मॉल कैप एंड द लार्ज कैप इंडाइसेस ऑन अ ब्रॉडर बेसिस। ठीक है, नंबर्स हमारे पास हैं। अगर मैं इंडियन इक्विटीज की बात करूं, राइट, इट्स ट्रेडिंग एट अ 1 year forward PE of 20.6x. The current P is 22x, it's around 21.6, 22x price to earning multiple. But the 1 year forward multiple of Nifty 50 is at 20.6x, which is close to long term averages, right? Now the problem is, many people might tend to argue, है ना, कि यार हम निफ्टी 50 में कर देते हैं इन्वेस्ट, राइट, बिकॉज निफ्टी 50 का वैल्यूएशन इज ऑल्सो पैलेटेबल, it's closer to past averages, but earning growth is not there, na? The earning growth is not there. It's growing, the earnings are growing at 10% rate. The fairly better than Q4 FY25, where it grew by just 4 to 5%. Not 4 to 5%, just 3%. My bad. Right? But the multiple is not supporting, right? The multiple is not supporting, the earning growth is not supporting the higher valuations, which is in case of mid cap. Correct? Also, we see that if we exclude the sectors, if we ignore or exclude the volatile sectors like oil and gas kind of companies, Nifty 50 is trading at a peg of more than 3. Is trading at a PEG ratio, price earning growth ratio. We talked about the difference कि P and PEG में क्या difference होता है. अगर नहीं पता तो मेरी प्रीवियस वीडियो देखो। राइट, तो पीईजी एंड पेग का डिफरेंस के बारे में मैंने बात करी थी। राइट, अगर पीईजी बहुत ज्यादा है, अगर बहुत ज्यादा पीईजी है, एट देन मार्केट इज रिस्की। आपका पीईजी लाइक 1.5 1 की रेंज में होना चाहिए। टू भी कभी कभार चल जाता है, बट 3 से ऊपर इज वेरी हाई। तो निफ्टी 50 का पीईजी इज मोर देन 3 इफ यू एक्सक्लूड द ऑयल एंड गैस इंडस्ट्रीज, बिकॉज वहां पर कोई वैसे इन्वेस्ट नहीं करता खास। ठीक है, अगर आप निफ्टी 150 मिड कैप और निफ्टी स्मॉल कैप का पीईजी देखोगे, इज बिटवीन 1.6 1.7, फेयरली रीजनेबल देन निफ्टी 50। Correct. But PB is trading at a premium. The price to book value is trading at a premium of 9%. Right. So Nifty 50, as of my understanding, should be valued much based upon price to book value and not the price to earning. And why not? Because many of the companies which constitute Nifty 50 are heavy industries, asset-based industries like telecom companies, infrastructure, cement, and banking companies. All these companies are always valued based upon the price to book value metric and never price to earning. So I believe Nifty 50 is trading at a 9% premium. So I will pay more weightage to price and book to price to book multiple and not the price to earning multiple. Why? Because many of the constitutes, 90% of the constitutes or more than 80% of the constitutes in Nifty 50 are valued based upon price to book, because those are heavy industries or asset management companies, banking, insurance, NBFC type of companies. Correct. तभी मैं प्राइस टू बुक को ज्यादा यहाँ पे दूंगा वेटेज। बट एनीवेज निफ्टी 50 अभी इन्वेस्ट करने के लायक नहीं है, टू बी ऑनेस्ट, बिकॉज अर्निंग ग्रोथ नहीं है। एंड पीईजी भी मोर देन 3 चल रहा है, एक्सक्लूडिंग द ऑयल एंड गैस इंडस्ट्रीज विच आर द हाईली वोलाटाइल इंडस्ट्रीज। करेक्ट। मार्केट कैप टू जीडीपी अपना करंट 125% चल रहा है। एवरेज हैज बीन 87% अराउंड। FY24 में इट ब्रीच्ड दैट 130% का लेवल, बट एज ऑफ नाउ वी ट्रेड एट 87%। निफ्टी 50 का एवरेज 10 ईयर हैज बीन हाउ मच 13.8%, बट करेंटली निफ्टी 50 इज ट्रेडिंग एट अ 1 ईयर फॉरवर्ड ROE ऑफ 15%। राइट, ऑफ 15.1%। इट मीन्स अर्निंग ग्रोथ इज बाउंड टू कम बैक। स्टॉक्स अच्छा परफॉर्म करेंगे because the forward ROE is indicating better projection as compared to average. Because what is ROE? शेयर होल्डर में शेयर होल्डर का कितना पैसा बनता है, इक्विटी शेयर होल्डर का कितना पैसा बन रहा है इन टर्म्स ऑफ प्रॉफिट। राइट, एंड आगे जाके अगर कंपनीज के प्रॉफिट हमें हाई बढ़ते हुए दिख रहे हैं, if there is an expectation, which is indeed an expectation, that the earning growth will revive in the third and the fourth quarter. We have repo rate cut, we have GST cut, we have income tax cut, eighth pay commission is coming up, we have CRR cut, we have VRR auctions. Right, so all these things are infusing liquidity into the business in the banking system. Right, so earning growth revival hoga, and that is why Nifty 50 is trading at a 1 year forward ROE of 15.1%. करेक्ट। सो अगेन दिस इज वेरी इंपॉर्टेंट टू अंडरस्टैंड कि निफ्टी आपका पे ट्रेड कर रहा है। अब मैं ग्लोबल एक्विटीज के बारे में अगर हम बात करें, राइट, जस्ट टू गिव यू अ जस्ट, now this is a 1 month data कि what happened in September, but this table tells you the whole story. This table is comparing our market with the other emerging markets and the major developed markets as well. Right, so if we see where we are currently trading at a price to earning multiple वाला column देखो, whole market I'm talking about. It's not Nifty 50. Nifty 50 is trading at 22 times. But whole 4,500 companies listed on the stock exchanges, सबका मिला के आज के डेट में प्राइस टू अर्निंग इज 24.3. Peg is more than 5. Peg is more than 5. It's 5.5, 5.4. Right? But your PE is 24.3. If you compare this, and this is not the forecasted one, it is a current, right? The FY25 expectation, because FY25 FY26 सब स्टार्ट हो गया है। राइट, तो अगर हम इसको ये देखें, चाहे अगर हम एक्सपेक्टेशन भी देख लें, राइट, एक्सपेक्टेशन कम, ई कम होगा बिकॉज अर्निंग बढ़ेंगी। तो अगर हम 22 टाइम्स भी देख लें फॉर द FY26 एक्सपेक्टेशन, द ओनली मार्केट दैट इज ट्रेडिंग एट अ प्रीमियम टू द इंडियन मार्केट इज US at 25 times. Rest all the markets are below. Taiwan and Indian markets trade very closely. Very rarely people will tell you this fact. I posted something about the same on LinkedIn also. But Taiwanese market has outperformed Indian market every time over a 2 year period, 5 year period, 10 year period, 20 year period by a few decimal points. The valuations also are very closer to one another historically. वो close चलते हैं, right? US markets have not outperformed every time, but as of this particular point of time, the multiple of the US market at which it is trading is high as compared to the Indian markets. Taiwan is closer at 19.8 times, whereas rest of the markets are cheaper. And so US market is trading at a 12% premium to Indian markets. MSCI EM 17 के मल्टीपल पे ट्रेड कर रहा है, 15.4 के फॉरवर्ड मल्टीपल पे ट्रेड कर रहा है, 1 ईयर फॉरवर्ड मल्टीपल 31% डिस्काउंट पे चल रहा है इंडियन मार्केट्स के साथ। चाइना 31% डिस्काउंट, चाइना इज ट्रेडिंग एट अ 1 ईयर फॉरवर्ड मल्टीपल ऑफ 14x। कोरिया इज ट्रेडिंग एट अ 1 ईयर फॉरवर्ड मल्टीपल ऑफ अप्रोक्सीमेटली 10 to 12x। जो कॉस्पी इंडेक्स है, चाइना का CSI 300 है इंडेक्स, राइट? जैसे यहाँ पे निफ्टी 50 है, चाइना में CSI 300 देखते हैं। कोरिया में कॉस्पी देखते हैं, राइट? कॉस्पी इंडेक्स, करेक्ट? सो एवरीथिंग इज गोइंग एट अ डिस्काउंट। ब्राजीलियन मार्केट 58% डिस्काउंट। तो ब्राजील की मार्केट ग्रोथ इतनी अच्छी है नहीं, वहां पे लोग इतना इन्वेस्ट करते नहीं है, तो ब्राजील वी कैन इग्नोर एज ऑफ नाउ। बट मेजरली जो अपना कंपैरिजन रहता है, राइट, फ्रॉम यूएस, मेजरली फ्रॉम चाइना, फ्रॉम कोरिया, फ्रॉम इंडोनेशिया, ताइवान, ऑल दीज आर ट्रेडिंग एट बिलो वैल्यूएशंस, एट डिस्काउंट टू द इंडियन वैल्यूएशंस। हम ग्लोबल इक्विटीज की बात करें, ओवर द पास्ट 1 ईयर 12 months इन USD टर्म्स की बात हो रही है, MSCI इंडिया हैज बीन डाउन 12% एंड MSCI EM हैज बीन अप 15%। Over the last 10 years, MSCI India index has outperformed MSCI EM by 46%, even after the 1 year correction. Overall, over a 10-year basis, MSCI India, Morgan Stanley Capital International Index, has outperformed the MSCI EM index. सो यूजुअली क्या होता है ना, अपनी मार्केट्स हमेशा ही प्रीमियम पर ट्रेड करती हैं। आर मार्केट्स ऑलवेज ट्रेड एट अ प्रीमियम ओवर द MSCI EM। द एवरेज प्रीमियम एट विच दे ट्रेड इज एट 79%। इंडियन मार्केट्स ट्रेड एट एन MSCI इंडिया की अगर मैं बात करूं, इट ट्रेड्स एट एन एवरेज प्रीमियम ऑफ 79% ओवर MSCI EM इंडेक्स। बट currently that premium has come down to 54%. It again shows that we are into a good forward trajectory. The valuations are coming down, the earning growths are supportive, right? तो ये एक चीज है। If you see the contribution towards the global market cap after all the correction, US contributes to 48.5%, we contribute 3.5%, China contributes 8.9%, Japan 5.2%. These numbers are good to understand. The global market cap is approximately around $15.9 trillion if I'm not wrong। 15% का ग्रोथ आई है, देखो, हाँ, $19.5 trillion का मार्केट कैप है। पिछले एक साल में 15.6% से ग्लोबल मार्केट कैप बढ़ा है। Over the past 1 year, the global market cap has increased by 15.6%. It currently stands at $19.5 trillion. But Indian market has declined by 10%. Indian as a percentage of market cap has declined by 10% because I showed you that chart. Right? It was as high as how much? 4.5%. It came down to 3.5%. Correct. Now, ये जो है ना, if you go down, ये कंपनी वाइज डेटा आप लोग पढ़ सकते हैं खुद से, राइट? बिकॉज मैं स्टॉक रिकमेंडेशन देता नहीं हूँ बिल्कुल भी। वो आपका कॉल है कि कौन सी कंपनी की वैल्यूएशन अच्छी है, आपको कौन सी कंपनी कौन से सेक्टर में खरीदनी है, बेचनी है। इट्स कंप्लीटली योर कॉल, राइट? अब सेक्टोरल व्यू दिया हुआ है इसमें। दिस इज द फेवरेट डिस्कशन। ऊपर दे गिव यू ऑल द ब्रॉडर व्यू एंड ऑल दीज थिंग यू शुड रिमेंबर। ऑल दीज थिंग यू शुड रिमेंबर। एवरी मंथ दिस रिपोर्ट कम्स आउट, एवरी मंथ दिस रिपोर्ट इज आउट एंड इट गिव्स यू द रीसेंट नंबर्स। सो जितना भी मार्केट में अभी करेक्शन हुआ है, ऑल द करेक्शन दैट वी हैव सीन ओवर द पास्ट 1 ईयर अप्रोक्सीमेटली, करेक्ट, तब से लेकर अब तक सेक्टर्स भी तो करेक्ट हुए होंगे। इवन द सेक्टोरल वैल्यूएशंस माइट हैव कम डाउन, दे हैव कम डाउन, राइट? नाउ हियर आई एम नॉट स्पेसिफिकली टॉकिंग अबाउट द बेनिफिट्स दीज सेक्टर्स विल हैव, बिकॉज GST कट सबको पता है, रेपो रेट कट सबको पता है, इंटरेस्ट रेट कट सबको पता है कि लिक्विडिटी है, एंड मेजरली सारे सेक्टर्स बहुत ही अच्छा परफॉर्म करेंगे मार्केट में। बट द थिंग इज, वी नीड टू नो अबाउट देयर वैल्यूएशंस एज ऑफ नाउ। Just on the basis of their valuations, are they palatable? Can we think of investing into these? So if we talk about the automobiles, they've come closer to their 10-year average, right? Towards 26.5x. That's closer to their 10-year average. Right? So the valuations are supportive, and the boost that we are getting from a liquidity perspective from the government of India and RBI in terms of GST cuts, in terms of interest rates cuts, in terms of tax cuts, in terms of the VRR auction, CRR cut, aids pay commission to be there, right? All these things are aiding this particular sector of automobiles. And the valuations are also palatable, they are supportive. Private banks are trading at a discount. They're trading at a 10% discount to their historical averages. Banks to be valued only upon the price to book value. Those guys who are valuing the banking companies or the financial sector companies, be it the private sector bank, public sector bank, NBFCs, insurance companies based upon price to earning are completely wrong. प्राइस टू बुक पर ही वैल्यू कर सकते हैं। क्यों कर सकते हैं इसकी मैंने बात करी अपनी वीडियो में, उसको देखो, समझो, डाउट हो तो पूछो। ठीक है। सो हिस्टोरिकल एवरेज प्राइस टू बुक वैल्यू 2.5x रही है, बट करंटली इज ट्रेडिंग एट अ 2.2x प्राइस टू बुक मल्टीपल। Now there are like multiple things for banks, right? Because of the interest rate cut, they are facing margin compression because they have to reprice their books, because majorly all the books for private sector banks are linked to the marginal cost of lending rate, where they have to reprice the books very quickly. That the I would say the reduction in the deposit rate or the customer deposit rate in terms of fixed deposits or some other kind of short or long term deposits comes with a lag, right? And hence the banks face certain intensity of margin pressure in the initial days when the interest rates are coming down, right? But since there will be more such liquidity in the market, again, the banks are tend to outperform in the long run. The problem is with the PSU banks, which trade at a 36% premium. They're trading at a 1.2x price to book value multiple. The average has been 0.9x. Majorly of their books are linked to the external benchmark lending rate, right? So, उनके NIM compression कम होंगे as compared to private banks. But the problem with the public sector banks is they have much of the held till maturity securities in which they have to pay that higher interest rate, right? So that can be an issue. But overall, the banking system seems to be very strong because the provision coverage ratios have increased from 50% to 70%. Their CRAR, the capital adequacy ratios, have also increased from 13% to 17%. The liquidity in the banking system seems surplus. All those supports are there to boost the banking system, right? So all these things are there. NBFCs, they're trading at a 25% premium, though they seem to be at a much better position as compared to banks, because NBFCs usually borrow at a floating interest rate and they lend at a fixed interest rate. So the rate at which they're borrowing has come down, but the rate at which they're giving has remained fixed. So hence there won't be any margin compression in terms of the non-banking financial companies. But the problem is with the stress starting to build up in the NBFC space, with the unsecured lending, with the microfinance companies. Right? So a bit of stress has started to get built up because we can see gold loans rising by more than 100%. The growth in gold loans has been more than 100% year on year. And that shows stress in the market somewhere, right? Capital goods, they're trading at a 41% premium as of this particular point of time. Cement is trading at a 21% premium as of this particular point of time. But that doesn't mean that, one more thing, we have all the consumption, right? We have all the sprinkler effect upon consumption, right? Now the thing is, people are saying that the focus has shifted from capex to consumption. It's not the case. The consumption contributes to more than 60% of a GDP, a gross domestic product. The focus is still on capex, but the focus has also been there on consumption now as well. The focus has not shifted. Capex would be done. Capex would go on and on, will go hand in hand. But the focus has also gone on consumption as well along with capex. So capex खत्म नहीं होने वाला. So all these companies of cement, capital goods, infrastructure, they are bound to do well in the upcoming years as well. Consumer is trading at a 4% premium, right? 40.7, 40.2x. But again, consumer is bound to benefit on account of the intense liquidity sprinkler multiplier effect in the economy. Consumer durables 24% प्रीमियम पे ट्रेड कर रहे हैं आपके एसी फ्रिज एंड रेफ्रिजरेटर टाइप ऑफ कंपनीज। केबल्स एंड वायर्स भी आ जाते हैं कंज्यूमर ड्यूरेबल्स में। केमिकल्स 16% प्रीमियम पे ट्रेड कर रहे हैं एज ऑफ नाउ। हेल्थ केयर इज ट्रेडिंग एट ए 27% प्रीमियम एज ऑफ नाउ। Infrastructure, it's closer to long-term averages, 1.2x, right? So all these companies like NHAIs and all these kind of companies. So finally, these companies have come up to fair valuations or like palatable valuations. Logistics is trading at a 4% premium. मीडिया इतना लोग इन्वेस्ट करते नहीं है, वो 39% डिस्काउंट पे ट्रेड कर रही है। बट मीडिया स्टॉक्स पे इतने खास कुछ इन्वेस्टर के रिटर्न भी नहीं बने हैं, टू बी ऑनेस्ट। मेटल्स देखोगे, राइट, इट्स ट्रेडिंग एट अप्रोक्सीमेटली कितना परसेंट, हिस्टोरिकल इज 5.9x, इज ट्रेडिंग एट 6.7x, राइट, सम 5-6% ओवर वैल्यूएशन। Oil and gas, it's more of like volatile, it's more of non-investable sector as of my understanding, but still it is trading at a 23% premium. Real estate is trading at par. After all the correction that we have seen in the asset heavy businesses, is trading at par. The long term valuations had been 29x and is still trading at a 29x price to earning multiple. Retail, which will really benefit on account of consumption boost GST cut, is trading at a 14% discount to long-term averages finally. They have been waiting for this time. Right, the long-term averages has been around 81x or something, but it's currently trading at 69.8x. Technology, finally at a 2% discount. We have faced all those headwinds, US tariffs, H1B visa, but now the earnings are bound to come back, right, in the subsequent quarters. So historically, average has been 21.4x. It's currently trading at a 20.9x on a price to earning multiple. Telecom is again overly priced. Same for the utilities. And as of now, we can see as of this particular point of time, the consumer sectors seems appealing, and the retail sector seem appealing because the valuations are palatable. Apart from that, technology in terms of valuations, you also have infrastructure and automobiles in terms of valuations. They also seem good. Ideally, correct? So this was the valuation discussion out of the report. बाकी स्टॉक्स पर्सपेक्टिव कौन कितना ट्रेड कर रहा है, ओवर वैल्यूड है, अंडर वैल्यूड है, फेयरली वैल्यूड है, वो आप देखना. Anybody wants to ask me any questions? Any questions, anybody? You can put in the chat box or raise your hand. I'll be more than happy to unmute you. Anybody, any question? तो यही मुझे एक ब्रीफ डिस्कशन रखना था बिकॉज एनीवेज वी आर लर्निंग अबाउट फाइनेंशियल मॉडलिंग वैल्यूएशंस एंड ऑल दीज थिंग्स. वो अपना चल रहा है, वो हम सीख रहे हैं. पर इसको मार्केट से कैसे रिलेट कर सकते हैं, मार्केट में एग्जैक्टली हो क्या रहा है, राइट, वो जानना भी बहुत इंपॉर्टेंट है. राइट. तो आज के सेशन के लिए इतना ही. एक क्रिस्प एंड शॉर्ट सेशन था टू कीप यू अपडेटेड अबाउट व्हाट हैपेंड इन द क्वार्टर एंडेड बाय. राइट. फील फ्री टू आस्क मी एनी क्वेश्चंस एंड आई विल बी मोर देन हैप्पी टू कनेक्ट विद यू. चलो. थैंक यू सो मच गाइस. ओके. सी यू. टेक केयर. बाय बाय.